Merry Christmas to all our MMTs and people worldwide who try to make sense out of the world economic problems that are going to be challenges in 2012. Right now, it is all about 1224 and 1225, and the thing about it is it's a very special moment in time. So we're going to go ahead once again. One thing that we do like to do is train our people the right way, and what we're going to be looking at is at 2009 lows that we had one of the greatest buying opportunities ever, and we topped out, and that was 2009. That was when the financial crisis and the earnings cycle was getting better, and we had that dip, and then all of a sudden we didn't go into the double dip recession because QE2 came along, and we went right to the top. It was this very top back in April. If you type in Dow Jones or S&P 500 or Nasdaq, we called the top of that market that first market of the year. We came down, we bounced up, we had this 4-week here, and we said that we were going to go to all-time lows because the financial system, as we had predicted back in 2010 even so, is that there was going to be a lot of contagion, and all the bulls were in last year, 1 year ago. They were all getting in. The long-term trend line from the financial crisis that goes across here has been breached. This is a weekly chart. It does have a weekly buy signal. So let's take a look at the realities. The reality is Dow 14,000. What would that take? Or how about this? How about Dow 8,800 to 9,000? How about that part of it? And what is that going to look like? Well, we'll be happy to tell you. One of the things that we would like to show you clearly is after you see the long-term trend lines and that peak off of that 2010 and that double top, we called that reversal. Of course, what ended up happening on this weekly level on the Dow, unlike the S&P 500, and we get these yearly calendar lows because everyone was getting washed out of the market, as they were, and then we had some great buying opportunities and these weekly buying opportunities to sell short and then go long again. Now we have a weekly buy signal for the bulls going into 2012. What are the chances of breaking above Dow 12,000? Let's say the 12,800 area is that you would have to have a great earnings season. You're not going to have one. We have peaked out on the earnings season. We're at about 15% on the top end since that big lows that we had in the Dow back in 2009 right here. Okay? Let us not forget what happened in 2008. Let us not clearly forget where the world is and their world. What is that world? That is the world of countries that have bad banking problems, and they're bad. And the thing about it is the volatility got hooked right up here. We shorted it down. Not only that, we took it right down to these bottoms here. Calendar, we have all of the live trades. Everything we do is live before the fact. And when we were calling these tops up here, first one, you get the upside volatility. You come down, you consolidate it, you're right back here. And the thing about it is, we're right back here at this neckline on the Dow. I would say that you would continue to sell into rallies, going into the new year. I would also tell you that the low end of this Dow on the 2,000 lows down here, right above the 10,000, in calendar 2012, you're going to need QE3 to avoid breaking that low, because that's going to be the major catalyst support for 2012. What are we telling people and have already been telling for a number of time? And as far as, well, the technicals are the technicals. This is standard. Here's your trend line right here on the Dow. And that's where that first trend line comes in off of that bottom. But let us not forget that that Dow right there is going to be that upper end of that resistance level. Another thing that we're going to make quite clear, that the reason why we are saying sell into that resistance to the upper side of that Dow, it's going to take continuing earnings to push and drive the market higher. You can argue all you want that the multiple 10, 15 multiple or whatever on all of that public analysis is that, hey, we're cheap. Well, let me tell you something. They're cheap, yeah, if they can continue the earnings cycle. We see a challenging environment in 2012 in the Dow 30. We see that lower growth is where they're going to have to learn, and estimates are going to have to be taken down. So therefore, we've got everything against a Dow 13,500 or Dow 14,000 at the current environment, because the U.S. economy is going to have to learn how to live on a little bit lower growth in 2012. And we're telling people that it takes a couple of quarters of a lower growth environment in order to sustain the current rallies that you see in weekly volatility. And what do we always tell people? When we tell people, well, what's the best thing to do? Sell into the rally. So at each resistance level, it's a bullish weekly chart for the Dow going into new calendar 2012. So what? Right now, we feel that people are not totally coherent about the risk of the Dow, and that the Dow has many challenges throughout 2012. We called this Dow Jones in 2010 and 2011 live every single day of trading days in the market. And we have all the live analysis of when these things were going to happen before the fact, how to sell into that rally here in 2011, and we went miserably down here. We were correct, and you made a lot of money by getting out of your long positions and getting short. That's the bottom line. And if you'd like to go type in the search box Dow Jones on StockMarketFunding.com, it'll bring up all of the live stuff that we went through. And I'm telling people again, sell into the news, sell into the rallies. You're going to have to deal with a quarter or two of a little bit lower growth in 2012. And 2012, what the risk that remains, it doesn't matter if we do QE3, it doesn't matter what Europe does and how much money they put in there, it's still going to be a little bit lower growth environment, but later down the road, that too will fail, as they always do. And we've been calling this market ever since that financial crisis took this Dow down. And that the earnings trough had played a good role. Earnings had turned around. Estimates were taken down. And what we're telling people now is that the broader stock market in the U.S. is a safe haven place to be, but the estimates in the earnings cycle need to be coming down. And what is going to be your trade management, knowing how to sell into rallies. We're going to tell you that it's going to be extremely volatile for a regular investor or even a regular trader for that matter, and that the price volatility that we said was coming in 2011, we said it would come at record levels that people were not used to dealing with. Not only that, what we're telling people in 2012 is that the very same volatility is going to increase and stay at high levels as it will, and how are you going to maneuver through that market in calendar 2012? How are you going to use and apply the finest risk management tools for the big downsides and for big rallies? Hey, great rallies, but you got to know when to sell into them. And not only that, what we're telling people in calendar 2012, that the short side of the market pays, and also at periods in time the bull side will pay in a shorter macro period, but the longer macro remains that the risk for individuals remain at record high levels. And if you don't know how to market risk, in these kinds of capital banking crises that are happening around the world and how they're going to affect growth and how potentially it rolls over to here. Okay? And what would QE3 by Ben Bernanke do? We called every one of those little shenanigans that they did and everything. We have all of the live day-to-day analysis in stock market funding. And the thing about it is we care about people, so our Christmas present to you is to be wary and know that you do need certain kinds of tools and experiences to be able to manage this increased volatility that's coming upon us, and that the earnings season is going to come down. Analysts are going to have to do the old trick in the book, and that is revise it down. That means selling into rallies is the right thing to do. We're not here to tell but our MMTs make money on those rallies down, and they make money on the rally ups. So the bear moved down. Hey, it is bearish for a reason at times, and then everybody comes back and wants to be extremely bullish. But what you're going to have to take into account for is that earnings trough, forward looking in calendar 2012, it better be more than robust to get to the higher end of the Dow. Now, let's take a look and see what happens if lots of bad things happen. Listen, there's nothing to say that if this government in the U.S. doesn't do the right thing, and if the worldwide catastrophe gets worse and earnings could come down even worse, you could bring that Dow right down here to that 9,400 level if you break that. Okay, this is the calendar year level low that it put in, right below 10.5. And we don't have any Lehman Brothers collapses that are going on in the U.S. anymore. However, I can tell you, any liquidation in any big banks in Europe would have an emotional impact. And you could see extreme volatility moves to the downside. Just as you've seen the same euphoric bull move to the upside. They work both ways. I am going to tell all MMTs to continue to sell short into the upper end of the resistance levels, and that the January 2012 quarterly earnings are coming upon us, and estimates have come down. Earning warning season, we run a percent level on it. We're very crafty in that. And we've seen lots of warnings coming out. Look, at 2011 wasn't the great. Everybody thought that 2011 was going to be the best year. We told people, no, 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 no. Growth was coming down. Yes, 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 yes. And before any of the moves ever went down, we were telling people here, time to jump ship, get short, and it works. And it comes back up. It puts in the top here for a week. We did these live trades and shorted the thing all the way down to the bottom. Why? Because all the bulls and everybody in 2011, they were wrong. Geithner admitted it, Bernanke admitted it, and then, eventually they're going to have to admit it. And stimuluses work in a certain way. So, once again, Merry Christmas, sell into resistance, let those earnings come out in calendar 2012, let those growth patterns figure out where they're going to be, particularly if you're, even a short-term investor or a long-term investor, you need tools to hedge risk. info@stockmarketfunding.com. Get those risk management tools that we have that would help you neutralize the volatility in 2012. Dow Jones got a major weekly resistance. Any moves up in this bull run that we've had off of this bottom, this is that low right here. This is the last 4 week. That was Europe. All Europe to the upside. All Europe to the upside. Boy, they got all the answers, don't they? But when Europe wasn't doing so well over here and we had that big double week reversal, that was a great side of the market to be on. That was the end of it. But we are at a bullish top resistance level going into 2012, sell into resistance. Follow us on StockMarketFunding.com. We will be calling the daily move before the fact, not after the fact.